G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So the topic of this video is just the crypto market and stock market. Just going over some news on Twitter. No trading view in this video, so not really good at charts. Just looking at some news that's happening and breaking, and what is driving sentiment on social media. So first of all, what's really big is we got the finalized date for the launch of the spot Ethereum ETFs. We're going live for trading next week on Tuesday, July 23rd. So I always use this photo of Gary Gensler with a grin. He gave in to them. Yeah, he was politically pressured to really pass these ETFs. He didn't want to. He's more favorable about Bitcoin because he does deem that a commodity, whereas Ethereum and the rest of the altcoin market, he just doesn't see that the same way. He just sees them as securities that, due to the staking mechanisms, due to, they've got founders and whatnot. They're not really classified as the same as Bitcoin because Bitcoin doesn't really have a founder. It's sort of disappeared after you created it. So it's not really a company. It doesn't have, products attached to it, which can really turn into a company, like it's DeFi protocols and gaming and all the rest of it. And, these things are monetized and they have to grow and have healthy balance sheets, just like companies do. And Bitcoin's a bit different. It doesn't have to rely on its earnings and its profits to carry it forward, and its community. It's really based on the belief and the story of true independent liberty, really, against the system, and having something that's safe haven like gold. It's pretty much digital gold people can flock to during hard times. And it's just a hedge against the tyranny, uncertainty, and also potentially a hedge against inflation in the future, and following more closely what gold does and silver and rest of commodities, but something more special, digital, that can be carried around everywhere and that. But Ethereum, it's good to see finally got the date, and we'll have to see the price action going into the event, and will it be buy the rumor, sell the news, or it's the start of the bull run? But you have to wait and see there. Next one, talk about the fear and greed for the stock market, and it's hit the highest level of greed since May 17. So 2 months, it's back up to highest level, 62 reading. It's been down below neutral fear for a little while, and as you can see, this is more of an in-depth chart, what it looks like. We had a dip down late April, then mid-May we had a peak up here, 62-ish, 63, whatever it is, and we dipped down, hanging around here for a bit, now we're back up there again. So approaching his levels, and you can see the stock market is charted here, and it can go down, up a little bit, down. Doesn't follow the price exactly, but it gives you a good indication of when the extreme fear hits. We have solid bottoms in the market. We had extreme fear here, this dotted line. We had bottom in the market. Here we didn't quite have that. We had a bit of high, much elevated level of. It's about 25-ish. I believe this looks like a 25 reading. So it's way above. So we had a little bottom there. And we had it dip below the dotted line again here. And it was definitely the bottom. Again here, fear had a really low reading here. A local bottom before it went lower. Again, so on every dip we get really big fear readings. But here again, before the run up again there. So recently it was May, and now we're sort of heading back up again. So are we out of this fearful territory and see more greedy levels and higher stock prices going up to 6,000 beyond the S&P, or will we tick over and this be another high and then back down to fear levels? We'll have to wait and see. We don't know. And God knows. I can't predict the future, but we have to take what the market gives us, essentially. Go with what the market says, not what you think. It's not what's important. Jesse Cohen, this week's most notable earnings. Some ones that have gone and ones that are coming up. So we had Monday, we had Goldman Sachs and BlackRock. Zoom into it. Goldman Sachs and BlackRock. Tonight, Australia, which is early in the morning in America, the East Coast, we have Bank of America, United Health Group, Morgan Stanley, and Charles Schwab. Then we have Johnson Johnson, United Airways. We also have ASML. Then Thursday night for me, we have TSMC, Netflix, and then Friday night, which is Friday morning in America, we have American Express. So the ones that have just gone, we can show you the next one. So US big bank stocks decline on Friday after earnings. So just passed Friday, just gone last week. We had Wells Fargo 6% recording the largest drop in history on earnings day after net interest income disappointed. Citigroup sank 1.8% due to cost worries. JP Morgan fell 1.2% as guidance was not enough for investors. You can see blue is Wells Fargo, Citigroup in pink, and JP Morgan Chase. And they're not looking optimistic. Their guidance going forward. And yeah, Wells Fargo, which reported, did see a big dip. And same as, Citigroup. Hovering some mid-range for JP Morgan. All right, so bar charts. Founder Jeff Bezos sold 403,974 Amazon shares worth $80.8 million. He's now sold $10.25 billion worth of shares this year. So it keeps on racking up for Jeff Bezos. He's just getting out. He's dollar cost averaging out, as I've mentioned in previous videos. He just keeps on selling. Same as NVIDIA. This guy is different. It's not Jensen Hung. This is Mark Stevens. NVIDIA's second largest shareholder and board member since 2008 just dumped another 156,023. NVIDIA shares worth $20.2 million. The insiders are dumping. What do they know? The average retail investor doesn't. I have to wait and see that one. And lastly, we'll talk about NVIDIA again. It's versus Cisco in 2000. So we have, at the height of the dot-com bubble, Cisco was worth 5.5% of US GDP. Today, NVIDIA market cap is worth 11.7% of GDP, over 200% higher. Whole US gross domestic product. Look at that compared to Cisco when that collapsed. Quite interesting there. We just keep on rolling upwards. It just gets more vertical. Look at the way it just goes up straight and straight and straighter. It's like a pole vault. And it jumps over. Will it make it over the bar, or will it just crash down? Or, you know what I mean? On the other side looks nasty and ugly. You know, it's going to come. It's going to come when it crashes really, really hard because of how hard it's ran up. The harder a stock moves up, the harder it moves down. It's just how it works, because we have a lot of profit taking and a lot of people losing money on the way down as well. So people taking profits on the way up, you'll see decline, and then another shoot up, and then suck the retail in, and then boom, like Cisco, gets sharp, it dropped. Look at that. Ridiculous. So anything can happen. This AI craze is still continuing. I did see there was going to be a meeting with Mark Zuckerberg and Jensen Hung. I talk about AI. Okay. Couch interview to see what happens there and what the outcome of that is and how much they talk up the AI narrative moving forward, to see if NVIDIA and Facebook and other companies can continue to integrate AI and help with their companies and increase revenues and customer service and experience and their products and so forth. So we have to see how long the interest of AI goes. And yeah, it's definitely very telling, that chart says. And yeah, that is all I got. Thank you for tuning in and watching the video. Hope you enjoyed this one. I just wanted to do a quick, simple one, just going over some news and some data. And we have to wait and see for tomorrow's, or find out for tonight's reading for US retail sales month over month, which will be quite interesting. So tune in for that. And we'll go over a rundown of some charts, look at the consumer data, and seeing how well the consumer's holding up in the US to give us the rest of the world, even Australia where I live, an idea of what is coming for the global markets, particularly the stock markets, crypto markets, and going into the day after that with the housing market as well. So it's all assets are starting to bubble up and show us signs of overheating and peak euphoria in times of high inflation. Everything's struggling. But we'll have to see what the numbers say. We have to go out the data, whether you believe it or not believe it. This is what the Fed follows. So you have to understand that this is the data they're using to make their decisions. And yeah, we have to leave it there and see what happens. And if it comes in better than expected, the retail sales, then we have a stronger than expected consumer. If we have it weaker, then it really gives the notion that things aren't quite doing so well, and the Fed will have to cut sooner. Or it'll give them a hint when to cut. It'll give them some. They need to see some bad data, really, not just see good, to get them to cut rates, because that's not how they work. They work in reaction to what they see in the data, which if it's negative, they will cut to ease conditions. If it's positive, they will stay the course and keep rates high for longer. So, yeah. All right. I want you to smash the like, comment the thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.